Let's take a look at some information and charts on MakerDAO for Brave New Coin. Lots of moving parts with Maker. It's a lending and borrowing platform. It's a stable coin. It was single collateral. It's now multi-collateral. They've learned their lesson and how the liquidations work. So whenever you're looking at the lending platforms, you always have to look at the competition. You have to look at liquidations. We have to look at token price, obviously. For Maker, probably more than anything else, the fundamentals are more important than technicals. The burning mechanic has proven to be sort of a big deal since January. They also recently introduced Oasis.app, an easier way for anybody to sort of get DAI. They're also introducing, looks like Compound and Aave like connections with DAI in the near future. The more this stuff plugs and plays with everything else, the better. I think a rising tide raises all boats in the DeFi ecosystem. Lending and borrowing, all of this stuff is important. It sort of makes me wonder if Compound or Aave or even SNX, SNX is a great example. They have synthetic USD, which is a type of stablecoin. Does Comp release a stablecoin? Does Aave release a stablecoin? Did they go that route? Certainly possible. I don't know what's preventing them from doing that. Arguably, they already have, Aave USDC, Comp USDC. A lot of this stuff is stablecoin onboarding related. Most of it's USDC or USDT. In Maker's case, over 50% of it is comprised of USDC. So at what point does it not become a stablecoin or a decentralized stablecoin if it's comprised mostly of centralized stablecoin? Is it truly DeFi, the ship of Theseus? If we keep adding USDC to Maker, let's say it goes to 65%, right? Is it still decentralized? Something to think about. You can go to Maker Burn. You can watch how the burning mechanics work. I'm not going to go into complete explanations of everything here, but there's a lot of stuff going on. All of the debt ceilings are voted on. There's a ton of governance stuff. You can see it scrolling through the bottom of this website here. You can see how many tokens are burned. You can see the burn rate. You can see how much is taken out of circulation. They give you a PE ratio, which for some people is the most valid of any DeFi coin because it's purely protocol based and not based on supply. It's not based on volume of an exchange, for an example, like Uni. So some nice stats here. You can see the total DAI supply. Again, if you add this up, most of it is 3 billion is in USDC, 5.48 billion total. That's excluding all this other stuff. So it's definitely over 50% USDC or PAX or TUSD. So it's helped it stay stable as a stablecoin, but it's certainly lost its complete decentralization. I don't think anybody would argue that. And if we look at the burning mechanic over time, things really picked up kind of before the breakout in price. And in general, supply side versus demand side stuff takes a second to kick in. Even EIP 1559, even any Bitcoin halving, these things take some time typically for stuff to pick up. So this took a few weeks, a few months, and then a few months again to go again in April, right? From December to February, it had a run. From April to May, kind of had a run, and it's declined with everything else since then. But should burning continue or pick up pace, I'd expect it to have a leading effect on price. So definitely important to watch for that, just based on supply demand. And we can look at that protocol revenue piece. The block has some stats on this. We can separate it between supply side, which is Uni, pure supply side, which is fine for them right now because they're over 50% of total DEX volume on any given day. Clearly the leaders in that. They don't necessarily need protocol side revenue or protocol specific revenue when their supply side, their volume is this high, right? The Maker is purely protocol. That isn't going to fluctuate with the amount of stablecoins printed, right, per se, or the amount of DAI used on an exchange. A few of these have built-in protocol revenues. Balancer, Synthetics, and Uni do not. Now that could change. Each project could add a governance piece involving protocol revenue at some point in time. That may happen. I think it's unlikely that any of these projects go 100% protocol revenue like Maker is, but it's important to always know when you see PE ratios like this is essentially the PE ratio, market cap over revenue. annualized. And you look at this, you see Sushi down here, Balancer, Aave, Curve, Uni, right? And Maker's towards the top. And then you realize, oh, okay, well, it's all protocol, it's not supply. Maybe it's the purest version of a PE ratio. Nevertheless, this all can still help you make decisions on whether or not to invest in this sort of stuff, right? It's just all, at the end of the day, it's all information. DieStats.com has the full breakdown of everything, including stability fees, including all of the weird vaults, RenBTC, Aave, just a ton of stuff that you can lend out. Most of it is, like I said, USDC. The token itself is used to vote on all of the proposals in regards to debt ceiling and rates, saving rates, what gets listed, what's allowed for collateral, super high level type stuff as far as governance is concerned. And you can look at these votes and see who votes, and most of it is sort of VCs or hedge funds or people who have like a big interest in this. It's not Joe Schmo voting on Maker governance most of the time, or any governance protocol really. And because of that, the on-chain stats don't really tell me much, or shouldn't really be crazy active. A lot of this is speculation based as far as price going up, transactions on-chain go up, stuff gets moved around in and out of exchanges. In general, since 2018, this has been rising on a rising trend as far as transactions per day. Average transaction values effectively at an all-time high from when the token was first distributed. A lot of that has to do with all-time high in price. NVT, like everything else, is at the bottom of the barrel, which is inverse to buy or sell signal. So this should be a massive buy signal on everything if you believe NVT is a worthwhile metric and or tool for non-Bitcoin things, which it not necessarily is, but just something to keep in mind. Active addresses have increased over the years as well, along with transactions, but are declining, have declined pretty significantly since January. So just like any governance token, those stats probably less relevant. What's probably more relevant is, can DAI hold its dollar peg? What's the TVL? What are the components of the TVL? If we look at DAI in the, what color is it here? Blue, the light blue. You can see how previously, even since March 2020, it was really a standout in crazy volatility relative to everything else. The pink one here is GUSD, which has been extremely volatile relative to everything else. You could say 98 cents like isn't that big of a deal, but if it's a stable coin and it's supposed to be $1 in any given moment, that's a pretty big deal. So if we exclude GUSD, you can see that as the USDC stuff picked up for the collateral in DAI, the stability came right down to $1. So that's really helped them immensely, keeping that stablecoin actually stable, legitimately. So it's really in line with Tether and on all the other ones that get most of the use these days. And if we look at the total slice of market share that DAI holds, it's got about 5% relative to Tether, USDC, and Binance USD, the big four, Tether being the biggest, USDC being the second biggest. And that's certainly been growing since 2019. Some of it is Tether, some of it is USDC. That's important to know and to keep in mind, but DAI issuance is still increasing. So because it's lending and borrowing, let's look at the competition on Ethereum. Most of it is Aave by a slim margin. Maker in second, Compound in third. All in all, each of them really hold around 30% on any given day. To me, it makes the least sense based on incentives why Maker has the borrowing volume and the TVL that it does. You'd think Compound and Aave, purely based on incentives, would have larger TVLs, larger volumes relative to Maker. I just think Maker's been around longer, so that's really helped it. And if you look at liquidation volumes on any given spike, Maker has the lowest liquidations typically. They have some built-in liquidation preventions to help with stuff like May 18th, where it was mostly Aave and Compound that were on-chain liquidations. Maker was certainly not zero, but a much smaller portion of that. And you can look at these vaults in a simulation, and you can say, okay, what if the collateral price drops X%? All of these vaults have different components, right? You can search for this on this website, but you can see if ETH drops 25% with no change in collateral, then there's a pretty big liquidation spike. 0.6 billion is liquidated. That's unlikely to happen, as a lot of these bigger vaults contain automated stuff like Yearn. So a while ago, maybe a couple of weeks ago, people were talking about this 500 million liquidation that we were close to hitting. But because it's automated, it shouldn't happen. It shouldn't ever happen that any of that stuff gets liquidated, because Yearn, the protocol, will just add more collateral. At least that's how I assume that should work. So in general, most of the CDPs, the collateralized debt products for Maker or on Maker, do have a liquidation price, but their liquidation prices are pretty far away from the current ETH price. This becomes a bigger problem if ETH drops quickly and people cannot provide collateral in time, or the network just doesn't function, right? Like on May 18th, when gas prices went to above 1,000 and the network kind of went to a sluggish grind, that's an issue for stuff like this. So as long as you're aware of that, if you're involved with the vaults and the CDPs, that's important to know, right? Let's take a look at some technicals. 5200 BPVR volume and RSI. Bitfinex was one of the first to list Maker a long time ago, 2018. Maker's been around, I think, even before then. Historically, it really didn't see any volume until this year. Even in 2020, it really didn't see any volume, didn't see any price action. You could argue that the entire chart pre-2021 was just a massive inverted head and shoulders setup. And until DeFi really took off, it didn't find escape velocity. And external legacy hedge funds helped this, certainly, as they're looking to get into mainstream DeFi blue chip stuff. So it's currently above the 200. It's still been in a bull cross since mid 2020, and it hasn't death crossed like a lot of this other stuff has. What you don't want to see if you're bullish, though, is this head and shoulders potentially in the making, which would certainly bring it back down to 800 to 1,000, I'd imagine. But right now it looks okay. Along with everything else, is sort of mean reverting. On the daily, it's got this TKC clamp, this TK separation, that it's in the process of mean reverting to 4,000. And when you see the TK separation, I always look for the duration of the momentumless nature in the TK lines. So the Kijun's been flat since the top, really. You can see how quickly this got oversold, even below the Tenkan, far below the Kijun. So the first step is reclaiming the Tenkan, the slow-moving average, and then eventually mean reverting back, in this case, to 4K. And you can see how that will take a while at times. This is the BTC version of that TK disequilibrium. The same trade setup applies. The expectation is mean reversion to 44, so long as we don't make lower lows. If you make lower lows while this is forming, then all bets are off for mean reversion. But if this can hold the lows, then the expectation is mean reversion when you see this. Similar setup occurred for BTC in early 2021. It got way overbought, came right back down, and then sort of went again. So even though the mean reversion is there, it doesn't necessarily mean we're mega bullish on everything DeFi-wise, because this could just mean revert and then die again, right? Which would be basically completing the head and shoulders. So if this, then that, but the first step is mean reversion, and it looks pretty good for mean reversion on the daily. On the 12-hour, you can cheat it a little bit by looking for this edge-to-edge move with a bullish TK cross, and you're starting to see both over the next couple candles. Again, telling you entry is here, exit is here, and the TK lines are on your side when you get this bull cross. Tells you anybody who's short up here or from the bear cross should definitely be out of their short by now. Or if you're in a short, it's warning you, get out. On the BTC pair, it's mainly just been ranging. You can see another massive multi-month inverted head and shoulders type of price action, and it kind of bounced where it needed to based on VPVR, based on previous support resistance. So I don't think this is necessarily tradable. I just think it's probably going to hold this range kind of indefinitely in perpetuity. The Maker ETH pair, very similar, where it has this inverted head and shoulders potential, but until it breaks above 1.6, 1.5, it probably just bounces around indefinitely until it picks up momentum. Historically, it's really been unable to outperform ETH in a big way over time. So lots of stuff to think about with Maker. DAI, stablecoin, regulations, KYC, AML, burn mechanic, PE ratios, borrowing and lending, liquidations, right? Tons and tons of stuff to look at. Price is probably the least relevant, but as this stuff picks up in DeFi, Maker should continue to do pretty well because of that burn mechanic. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool, where you can send ETH to USDC. You can also just view what I'm doing. You can see AUM allocations, performance. You can see we have the Maker sitting in here. Unlike a lot of the other stuff in this DeFi portfolio, the Maker lend rates are basically 0. So I just kind of have to sit on it and not lend it because it doesn't make sense to do so. But I have been adding over the past 2 weeks more and more stuff back into this portfolio because things are starting to look decent again. And on the BTC ETH side of things as well, been adding more and more over the past few days as BTC is looking like it's going to complete, or at least attempt it, this mean reversion to 44. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.